Happy Sunday, everybody. This is Jeff Scott. It is August 5th, 2018. It is 2:45 p.m. Thus, futures are not currently open, and this is my weekend review. As I've stated over the last couple of weeks, I'll do these when I have time. I just got done playing golf, and figured I'd get to it. I entitled today, Did Apple Save the Bull Market? Let's take a look and see what the charts are telling us. As always, it's for education purposes only. Any recommendation of the spirit of education, not investment advice. I'm a doctor, not a broker. I have no licenses that would allow me to manage your money or to tell you how to manage it for yourself. What I do is purely to help people benefit from some of the hard luck, the wins and losses that I've had. I'm independent. I do talk a lot about HGSI because I'm a huge fan, but I am truly independent, and I paid for the tools I use. Trading involves risk. I do talk often about options. I refer to the Options Industry Council, the OIC.com website, for information about why they're risky. I find them to be very helpful in my account. But like all trading, it does involve risk, and you alone are solely responsible for any decisions you make. Briefly, for those who haven't been here before, welcome. Drop me a note. Tell me how you found us if you're new. And as you saw in the beginning, my email address is hgsidoc@gmail.com. I started as a CanSlim follower. Morales and Catcher improved it. Ian Woodward, here may rest in peace, took it to HGSI software with George Robert, the proprietor, and really, to me, made it come alive. Ron Brown became Ian's partner. He still does active education, great trader, went very deep into volume spread analysis. Superior Profit, totally nothing to do with the rest of everything else I have, except I found this guy one day surfing the web. I bought his technology for both TradeStation and Metastock. It's very consistent with how I trade and how HGSI works, top-down investing. He's got some very interesting indicators, which I've incorporated into my trading, and he has some great education. Van Tharp's the king of money management. And then over here is the guy that helped me really turn it on to make big bucks, and that's John Person. And that, it's one thing to understand the market, where it's going up or down, what are the best stocks, but which ones do you buy? When do you buy stocks and options? When do you take the trade? When do you put your stop in? And I learned that from a combination of his books, his live and online education, and his wonderful set of indicators that I use in TradeStation and Thinkorswim. Now, he actually has gone into algo trading, not fully automated, although I know some people use it that way. What I think is cool about that, it didn't change anything. He just automated what he does and used the same indicators. Big fan of looking at divergence, convergence, different ways of looking at volume. Highly recommend his education, seminars, and technology. I own a lot of software. If I had to be stuck with two programs, it would be TradeStation and Thinkorswim for trading, and then for on the analytics side would be HGSI and EdgeRater. Not a great time for seasonality, unless you want to find stocks to short. There's a couple out there that I identified, and then there's a number of websites I like as listed here. Here's HighRostock.com. I get nothing if you sign up. I don't get anything free except the gratitude of the proprietor, and since I want to keep this program around as long as we possibly can, the more people that sign up, the longer I'm going to have a program to use, because I love this program. Free 30-day trial if you kick on the red link, and under investing strategies, where my arrowhead is now, you'll see hundreds of web videos from me, Ron Brown, and others. Stock patterns are cyclical. I say the same thing every week. It's like you took the usual pattern, you took off the very top, and as soon as it looks like we're rolling over, beginning of last week, the prior week, we have another leg up. Now, is that leg up going to peter out right away, or do we have a little bit of room to run? But it's almost as if we're in a Darvis box, and every time we think we're going to break through, we just bounce off support. Every time we think we're going to break out, we hit resistance. So it's a tight pattern. It's a tough pattern to make money. You're probably being in and out, stopped out. And you have to adjust how you trade. For me, that adjustment was raising cash, taking smaller positions, and also selling premium above and below the market. And I also, for the first time in a long time, saw tweets from and emails and other boards from a number of people that have been successful traders that have gotten blown up their accounts in this earnings season. And I guess Facebook, Netflix, what they did It's just horrible if you were holding them without protection. I own both of them. I don't own Netflix anymore. I still own some Facebook, but I actually made money on Netflix this fall and did okay on Facebook because I had options. I had put options in play to protect me. Now with Apple, and we'll talk about Apple in a few minutes, I had the downside of buying protection, and that is you either have to buy it back, as I had to do on my call, which I actually bought back before earnings were announced because I started thinking Apple was going higher, but a put that I paid a few bucks for expired worthless. But that's like healthcare insurance, disability insurance, and life insurance. You don't want to use your insurance, do you? Friday sector review, it was a good day. Energy still showing some weakness where my arrowhead is. Look how strong utilities were. I saw that on my bottoms up review as well. Staples have become strong as well. Very defensive stocks. In fact, have we moved to value? Have we moved to defense like Staples, utility, the real estate and other dividend payers were up? We'll see, and that would be bad for growth. But I'm not sure growth is done, especially after Apple's earnings came out. Now let's just look very quickly at Thinkorswim. It's easier, I think, to see and just get a sense of where I think the markets are and what my expectations are. I can tell you that last week when I looked at my 600 stocks, I saw a ton of stocks that looked like they were shortable. I didn't see that this time. And I didn't see great buy candidates, hundreds of them, but I did see some. So I just had a better feeling about the market than I did a week ago. And Monday and Tuesday and Wednesday, so here's Friday, Thursday, Wednesday. You had a sell-off on Friday and Monday, big day up on Tuesday, gave back some on Wednesday, and Thursday and Friday with a new PPS buy signal on the E-minis coming in on Friday. So if this is the trend line, we still got a ways to go. We shall see. We're right above the 17, which is above the 50, which is above the 200. I think this looks like it wants to go higher. On the Nasdaq, same thing, a new PPS buy signal pulled all the way down into the 50. So now we're at the lower end of the channel, or we got to the lower end of the channel, and then Thursday and Friday we had a big move. I think that one looks like it wants to go higher. On the Dow futures, a little bit more difficult for me to see. Let me give me some more space here. 1 year, 1 day. I need to back out some, then that's what I need to do. And the thing about the Dow, it's nowhere close to its prior highs. And we've talked about it before. We're at the annual highs, I believe, back here in July on the Nasdaq. But let me get enough time to say that for sure. And then, so we're at the all-time highs on the Nasdaq. And then on the E-minis, I think it's like the Dow. We go 1 year's worth here. Yeah, we still got to go back to January 29th. So the small stocks, the Nasdaq stocks, have hit new highs. We're still struggling to get back there on the E-minis and on the Dow futures. And then the Russell, which had been very strong, is the weakest of the bunch right now. And it's just sort of bouncing around on the 50-day. Wouldn't be a bad place for it to move up from there. But unlike the others, it had a down day on Friday, which I guess overall was mixed. If we look at the VIX is down. You could say all big moves of the VIX occur from this level, but so does long periods of time of doing nothing. So we're down at kind of complacency. And then on the dollar, on the daily, you could see the dollar had a doji up here. Remember, this is the futures. When I look at the ETF, it might look different. Now, if I flip and I look at the weekly charts just for a second, remember, these are futures, not the cash indexes. Just want to point out very quickly how strong, if you look at, we're closer to the highs of the year than the lows on the E-minis, the Nasdaq, weekly buys on the Dow, the E-minis, the Nasdaq, the Dow, and even the Russell, although it's had a couple of weeks of sideways movement, has still had a nice up move on the year. And look here, you can see that the VIX is down in its lowness of, where it sort of bases. And then the dollar, hopefully she'll get that. The dollar, even though it looks good on the daily, it's struggling. It's struggling to retake its 200-day on the weekly. So I think the dollar, it's got to break above that and stay there for me to be a believer, and it's been hitting up against it for a number of weeks. Just go back to my daily. Now, I do look at the cash indexes as well, and they're over here, but we'll talk more about them in HGSI. Rates, they kind of went sideways on the week. Actually, you can see the 30 years dipped down. The 10 years were kind of steady. And as I say down in the bottom, rising rates are good for banks, especially regional banks and insurers. And smaller or falling rates are good for those that pay dividends or need to buy or take loans, such as REITs, MLPs, utilities, dividend payers, and home builders. And clearly, I saw MLPs, utilities, and REITs and other large dividend payers making some of the stronger looking stocks on my bottoms up review. It's hard to see necessarily this blue line, but if you could see what's the 10-year rates actually went up a little bit this week when the 2 years did not, at least at the end of the week. And what that's done is we still have a flattening yield curve. This, when it gets to pink and the blue is where my arrowhead is, that will be a flattening curve. But perhaps we eased off on the flattening curve. And I've mentioned it a couple of times. When I look at when this blue line hits the pink, and then this other pink line is the S&P 500, the S&P doesn't usually fall until the blue line goes up. And I pondered what might cause that, and it's pretty simple. When does the blue line go up? It's when the Fed starts tightening and the yield curve steepens. So I guess the thing about falling rates or flattening yield curves is just a predecessor to the Fed having to tighten. AD lines were stronger this week, certainly on the right, the high cap stocks, and the white is the AD line, the yellow is the index. And on the mid caps, not as strong on the Russell 2000, but still positive on the week. And if I look at the NYSE, you could see on the weekly that you do have a nubbing up on the AD line in white. And then all these major indexes, ETFs, the spiders, the Qs, the diamonds, the IWMs turned up, while TLT turned down. Breadth improved. These are stocks above the 200, which moved up, and stocks above the 40, but not overbought. Here's my 3-month new high, new low. Here's where we were last week. We shot up, but we still have plenty of room to go before we have to see a turnaround. The daily McClellan, we're trying to go up, and yet you can look at the summation index that's not moving. So that's worrisome, and that's some divergence, and that would be one signal that there could be a challenge in breadth in this market, although I don't see it in other ways as much. And again, we're moving up on the weekly, but not on the summation index. So I try to figure out how are there different ways to look at breadth. And that one of the problems with a lot of our cap-weighted indexes, like the S&P 500, is that, as we've heard all year, the Nasdaq 100, it's being driven by 4 or 5 stocks. And that would suggest, if that's true, then maybe the market's not as healthy as the indexes would be. So I searched around. I came up with this thing. I found this thing called the Value Line Geometric Index. So this tracks the median move of about 1,675 stocks using equally weighted values and is calculated geometrically rather than arithmetically. So I invite you to go Google it and figure out what the heck that means. What it means to me is it doesn't overweight a Google, an Amazon, a Facebook, and a Netflix. And that this reflects perhaps what the whole market is doing. And when I look at this, I see that we've been in 25 years or 20 years of chop, and that we've hit this blue line multiple times. We just broke out within the last couple of years. Now, if you look on the left-hand side, and I wish I could go back further because we broke out somewhat prior to the 74 period of time, but I couldn't get anything beyond that monthly. Maybe if I go back to annual, I'll take a look at that. In fact, maybe I'll stop this in a second and look. But look how long we had an uptrend. What happens if we're going into that uptrend now? Pause it for a second. Let me try that. Yeah, that's not going to work. They only go back to this period of time. But this tells me that this business about there's nobody's participating in this rally is bunk, that this is a broad-based rally, and we broke out of something we failed on multiple times. Maybe we have a big run. I told you before in the beginning that from a long-term perspective, I'm still very bullish. Current buckets. Now, it's interesting what a difference a week will make. Last week on the right, I talked about how 12% of the stocks were getting above the, or below rather, their Bollinger lines, their Bollinger Bands, and that when it got to 20 or 30%, the market usually reverses. Look what we are a week later. We've gone from 57% below their midline to 55% above, so we've had a flip-flop. And now we're at about 11% of stocks above their Bollinger Bands, which is not a signal by any means, and only 6% below. So we've gone from a bearish posture a week ago to a much more bullish posture today. Interesting, this market is not a single market. We all know that. I'm not telling you anything you haven't heard before. But notice that on the Nasdaq, we actually had a Hindenburg signal on Thursday. And, that's kind of why I started this presentation with the title, Did Apple Save the Rally? So we'll have to see where we go. Nothing close at this time on the NYSE. And the main reason for that is just not a lot of stocks hitting new lows, which is bullish. Market tone, that's this bandwidth thing here, the Woody indicator. It's pretty neutral right now, and we'll need some kahunas to come in to flip it to more bullish, but it's neutral as neutral can be, yet the sectors show improvement with no red and some additional green popping up, especially in staples there. So, a little bit stronger market than a week ago. The canaries in the coal mine, well, after their earnings sell-off, they had a couple dojis, and they stalled on Friday at the 50. Now, it turns out you can make your own canaries in Thinkorswim. I never knew that. You just would take the symbols and add them together. Maybe I'll show you how one day. Now, know your news and earnings. So this comes from Econoday. Red are usually big deals, so consumer price on Friday, jobless claims and PPI on Thursday, petroleum numbers on Wednesday, and we've got the JOLTS, which could be important on Tuesday. And I'm looking, I don't see a lot of Fed speak, so medium to low news week, but still a ton of earnings. When we get through this week, we'll be through, I think, a big part of the earnings of the year. I'm sure everybody owns something on this. Some of them have been big players, like Turtle Beach, which is here, Etsy. I took my profits on it. Looking through Snap, Office Depot, Mylan Pharmaceuticals, Nectar, Sarepta, some healthcare stocks, CVS, Coca-Cola, Trade Desk, another widely held by people who listen to me. So there's a lot. And as I say in the lower right-hand corner, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let me talk a little bit about what I did with Apple. As I said I would, I bought a put at the money, which was at about 190. I sold a 200 call, and I bought, and I also sold a put at like 180 or 175. So what I did is I got premium on the short put at 175. I got premium on the long call, the short call at 200, and I used that premium and some cash to buy a put at 190. Before earnings came out, I just had I think it's going higher bug hit me. So I just took my short call off. So now I was left with a put spread of 200 by 175. I had about $3.50, $4 in it, and I owned 40 calls or 4,000 shares of Apple. And my Apple, the reason why, I thought about just selling my position because I roll up and out my options, which means I buy new every couple of months. I push them to a further out strike price, but I take profits. So the 180 calls had a 180. I had some profit in it, but not that much. And because I didn't have a lot of profit, it probably would have been smarter to just cash out the profits. But bygones, it was a great week because of Apple. Tough couple of weeks for those hanging on to FANG stocks without stops as Facebook, Netflix, and Google led the sell-off. Now, frankly, forget the stops issue because stops wouldn't have helped you with Facebook and Netflix. They would have helped you perhaps on Amazon. It just shows you that you can't be complacent and ignorant about when your stocks have earnings. Apple and Tesla, who could have thought that one, came to the rescue. Even Elon Musk even apologized to the analysts that he was mean to previously. While long-term indices to me still point to higher highs, I showed you the value line geometric. We enter August, a tough month, and I hear a lot of talk about, is this going to be another October, September of '87, flash crash later on? We're due, well, we'll see. And we continue to climb a wall of worry precipitated by the world's most famous tweeter, whether it's slamming Lamar James right before he goes and gives a speech in Ohio, whether it's tariffs, whether it's immigration and the wall. He has become great cannon fodder for comedians and late night talk show hosts. Usual top-down agenda. Let's go on to the charts. All right, so very quickly, I want to go back to TradeStation. I've historically done this, then I stopped doing it for a while. I just want to look at John's indicators and looking at the market indexes in TradeStation. As I pointed out, the market is not currently open. The futures are not trading, so we're looking at the close, which is usually just a little bit after the market closes on Friday. So the E-minis, and what we're looking at here are a couple of different things. And actually, let's look at them over on this one. My bad. All right, a new buy signal on the E-minis. It's in between its envelope, which is great. The price bar is green, which is the Alexander Elder impulse indicator. When it's green, I could be buying or holding. I shouldn't be selling. I look at the weekly and the monthly. They're all green with buy signals. I look at the high jump bar. It's at 57%, which is neutral. And I look at the weekly bongo, which is the second dot, which is green. I see all reasons to expect that to go higher. So the E-mini looks strong. What about the Nasdaq? All right, do I have the wrong blue on? Let's see. Yep. The Nasdaq on Thursday went into a buy signal. It's different in that the weekly is blue, as it's run up already quite a bit. And you notice these red dots here. These are some MACD divergence signals, and that might be concerning. The high jump is only at 63. The bongo's green. I feel bullish about what the Nasdaq looks like. Let's look at the Dow. The Dow, interestingly, is in a sell signal. The blue paint bar tells me it's neutral. Notice it does have the MACD divergence, while at the same time it's still in a green bull on the weekly and a bull on the monthly. So what does that tell me? It's a retracement in an uptrend or a pullback in an uptrend. So a little bit weaker, but I'm not that nervous. And let me just hit data, add a blank row, and hit at TF. And let's see if we can get the Russell futures. And you can see the Russell futures have been in a buy signal for a long time on the daily. And actually, they stopped trading. Never mind. I guess we don't get this anymore. So let's look at the IWM. or is it RTH? Let me just check a couple of things. All right, so here's the Russell 2000, the RTYs, and you can see they also took a buy signal on Friday and Thursday, although they got the MACD divergence. So they look strong. And so now let's take a look at HGSI. And the way I start HGSI is I open up my designer, I go down and I find my market analyst user groups. They could be in your non-index groups. But I go into those groups, hit Major Markets Plus, hit the warehouse view, which will bring it up here, and they should be 24, because I added the IWM. And then I'm going to change it to the top-down view, which is all price and volume heavily weighted to 1 day and 5 days, and make sure I'm ranked by combo. And I look at the top, the industrials, the composites, the mid-caps, the Nasdaq utilities. No wonder the market looks strong. They are acting well. The Russell, however, being the weak sister down here, and as is volatility. So let's open up and very quickly go through my top 7 or 8 things I like to look at here. Let's change the view to just a simple view here. So I don't think I'm going to learn much from these, so I'm going to go quickly. I'm moving up, near getting close to the top of the trend line, but still a ways to go. Weekly bond goes intact. That's the S&P. If I look at the Dow Jones Industrials, you could see it's had a big power move off the 17 there. That looks like it wants to go higher. If I look at the Nasdaq Composite, actually had a kahuna, which you don't see often on the index on Thursday. Didn't do much Friday, but didn't give up much of its gains. And lastly, if I look at the Russell, that was the weak sister on Friday, and you could see stayed above the 50 or closed at the 50, but definitely the weakest of the bunch. We look at the dollar, which now we're looking at an ETF, holding above its moving averages. Didn't do much on Friday. The bongos are green. The VIX we know is low because it was at the bottom, and you could see it's kind of as low as it's gotten. And it has stayed in that level for a while, but usually it's out of this level of complacency that big moves occur. Think back here in January, we were low, 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 and then kaboom. Dollar's strong. That we'd expect gold to probably be on the weaker side, and gold continues to be something that, why would you buy this when it has an 8-day blanket, a 17-day blanket, and a 50-day blanket, which will limit any advance until it breaks above that 200. It's still in a long-term bearish stance, and hard for me to believe, except for short retracements in a downtrend, that you can make any money. And the silver is sort of indicative. It ran right up to the 17 on Friday and failed. So then I'll go down to 07, which is the industry groups, and I'll look at these with a force up too. So I have marked improvement this week where I've got 53 groups moving to the upside. I'm going to talk about them in a second. And then to the downside, I have 23. What led it to the down on Friday? I think biotech, internet, oil exploration, specialty pharma, banks, renewable energy, electronic components, healthcare suppliers, except not apparently tandem, internet-based semiconductors. What do you see there? Those are high growth groups. So high growth had a rather bad week. Yet, let's look at what worked. Consumer electronics, defensive play. Packaged food, defensive play. Food and drug stores, defensive play. Household products, defensive play. REITs, banks, beverages. There's a lot of defensive plays in that list. So does the big money know something, and are they moving out of growth into value? We'll see. Now, open this up. I've got a comparer of growth versus value, and you could see that it's been choppy. So when it goes up, like the run from June 22nd to July 24th, that month really was growth leading. And we've had growth dragging down by value, And now, and this is a daily chart, we had a couple of days of growth turning it around, and then on Friday gave some back. So we'll see. If growth is lagging, then discretionary is probably going to be lagging versus staples. It currently is. Anything else here that's worth talking about? This just shows you the strength of the spider versus the GLD, that stocks are outdoing gold. Oil, which has been stronger than gold, is high. Commodities are doing worse than bonds. Less volatility now than the 3-month average of VIX, so volatility is low. So I learned a lot. The Russell has been weaker than the Dow going back a couple months. See that in there as well. Some goodies that I like to look at. Then typically I will right-click on each of these and look at some of the top ones and see if there's anything I like. So let's look at a couple of these. I'll go through a couple of groups. I try to do this more for demonstrative purposes of how to use the technology. So I now go to my webinar view, and the first one here is GoPro. Now, it's hard for me to want to buy the name GoPro, but I got to tell you, I love the chart. The stock's been beaten up forever. It broke out above the 200-day moving average, had a PSI reversal, a kahuna, a mobile breakout from a squeeze, and a Bible gap up on Friday. If I forget its history and how it came out and then just really lagged, I see the revenues have been dropping. That's bothersome. But maybe it's a turnaround with earnings coming back into the stock. It's got a lot of demand. Everything up here is green. I actually like what I see here with GoPro, with caveats. It's GoPro. Let's see the weekly. Look at this. Is this not a Jesse Stein picture? In a second, I'll show you tandem and show you the similarities. GoPro looks like I might want to go pro with a little bit, some options on this. Just a thought. Control 4. I hated the remote control in my house. I replaced it with Crestron. They broke out. Universal Electronics, UEIC, Bible Gap up, breaking out. And then here's here, which is Turtle Beach, which has done just wonderful for stock, especially that makes no money. Now, I mentioned Tandem. I mentioned it a lot. It's probably my pick of the year. And I only count the picks that I do either from the podium or I do on my webinars, because everything else you could tell me are lies. And I don't remember if my meeting was in March over here or if it was in April. And I'll have to go back and check. Didn't really matter. I got into it around 6, so it had to be over here. On April 8th and 9th, we had a meeting in Orange County, 7th, 8th, or 9th, and I believe there's another one coming up in October. I'm waiting to have confirmation. And this was a stock I liked. Why did I like it? Because a stock that had gotten killed had gone sideways for quite some time, and then all of a sudden it started to have volume coming into the stock, and it broke out. And it ran from my price of 6.5 to where it closed at 33. And this is all of 4 months. How many of your stocks have gone up 5 times in 4 months? Now, I've seen that a lot with option plays. 20 cents go to $1. But I haven't seen a lot of 6 go to 33 overnight like this. So that was a big win, and I know some people took the call because they've let me know via email, took the trade. Packaged food, this is a boring group, but it's a defensive play. And right now, if there is a shift from growth to value, now keep in mind that I said if there's a shift. 1 or 2 days does not make a major commitment in my mind. And I would not change everything I'm doing. In fact, if I go back here and I look at this growth versus value, growth had actually looked like it was coming up. So I'm not going to bail on growth yet. But that certainly, the week ended up that way. So here's Kraft Heinz. Now, does that look that attractive? It's got horrible earnings per share growth this quarter. It does pay a dividend, hint that mattered this week. It had a pocket pivot in Kahuna. It's way down in the pattern. It looks like you're buying something that's in not quite a falling knife, but almost. It runs up to here. It's shortable. I have a hard time buying Kraft, but this just gives you a sense of what's working in the market. Campbell Soup, similar story. Herbalife, except for the Ackerman and Icon thing, I can't touch this because there's too much noise. But this, if you were long it, you'd be pretty happy. It was going sideways, sitting on the 50, had a kahuna, mobile breakout from a squeeze, Bible gap up, and looks like it wants to go higher. Post holdings, I guess they make cereal, pull back to the 50, kahuna, and break out the next day. JM Smuckers, the jam, trying to break out, still got to get up to 200. General Mills, Kellogg. They don't look great to me because I don't like this group, but they're all starting to move, and some of them look better than Kraft, even though Kraft was the first one. Food and drug stores, again, staying in the land of defensive plays. Natural grocers, beautiful move on Friday. Off the 50, a kahuna, a mobile breakout, Bible gap up. This is one that's worth doing a little bit of research on. Kroger's, let's go Krogering. Kahunas, pocket pivots, mobile breakouts from a squeeze. Kind of a sloppy cup handle breakout. All right. Sprouts Farmer, nope. CVS. Again, not a group whose fundamentals are getting me that excited, but I think it's just indicative of the caution in the market. Electrical Power, Energis. Let's take a look at this. It had a great day on Friday. It loses money. It's in a downtrend. I would pass on this. This is a bingo. It tells us like the baby out with the bathwater day. nVent Electricals and IPO. I'm not interested in either of those. So what I do is I go down and look at the top lists, which we're going to stop in a second. New Skin, I almost bought last week, and let's see if I can show you why. And boy, do I wish I would have. 1, 2, 3, 4. I looked at it here and I said, it's just pulled down to the 200. It's probably good support. It has good earnings per share growth, and I passed because its earnings were coming out. Well, its earnings were great. The stock popped, and congrats everybody that bought it. Clorox broke out. Again, these are not exciting names. Kimberly-Clark. So maybe that's where the market is going. So as part of my analysis, I go down the top 10 of these. Semiconductor manufacturing, I've got some applied material. I also have ESIO, and ESIO was an op play of mine. I bought them back in May. I was just checking. So I bought them, I suspect, on this move up here, which was a kahuna, pocket pivot, mobile breakup from a squeeze, Bible gap up. And I bought 20 calls. I sold 20 puts at the strike price, and then I bought some puts underneath to protect my margin account. And it's done absolutely nothing. Several times I put in orders to dump it that never got filled. And lo and behold, they came out with earnings, and boom, and the stock traded all the way down to 16. So I wasn't even paying that much attention because I just put the orders out there and I didn't get filled. The reason why I bought it was the earnings per share growth. And they still got great earnings per share growth. Bible gap up, breakout. This still looks great. I'll probably cover my short, not my short, but my short put spread, and let the calls run. So ESIO, I got a place there. I've got applied material as well. It's not really doing much. It still has decent earnings per share growth. Trades at a small multiple. Don't know why I'm holding it. KLA 10 Core. $200 stock, or $100 stock rather, up near the top of its range. Don't know Nanometrics, but breaking out looks interesting. Great earnings per share growth. Excuse me. And for those who've been watching me for a length of time, I like earnings. Taiwan Semiconductor, these are the ones that sort of warned that the cell phone makers were slowing down, but it didn't seem to impact on Apple. So I will go through each of the top 10. REITs, I mentioned they were strong. Think significant dividend plays, and several of the ones I liked are at the top, so let's just look at them very quickly. This was not one I picked because it's a $450 stock. If I do them for a dividend play, I can't buy options. Great growth, 2% dividend, too expensive. American Tower 150 pays a 2% dividend. Essex Property pays a 3%. Now we're getting there. Ventas, here's one that's you're buying after a pullback to support with a Kahuna mobile breakout from a squeeze. Great earnings per share growth, pays a 5.4%. Welltower pays a 5.4%, is another one I've been looking at. So REITs are looking good. So I could go through all 10. I'm tired. I just played some golf, so I'm not going to do that. My dog needs to go for a walk. But you could go through the top 10. What I also do is I build a number of watch lists, just to give you a sense. These are some of the groups I have. Some come from IBD, some come from MarketSmith. I supplement them with some of my picks that might be in, that I might have gotten from, I use OmniTrader. Trilogy buys and sells are a specific buy-sell signal that John Person uses. And then I have a number of things that come out of my scans and TradeStation. I look at all those stocks after I filter for price and volume, and I come up with my bottoms-up list. My bottoms-up list for this week is coming. And these are some of the stocks that made my radar. Actually, so there you see number one was Kraft. Another play on the consumer staples is Constellation Brands. Buying this as a high close doji off of this day and this date with a pocket pivot kahuna out of a squeeze with some earnings growth coming in, so I like that one. Talking about a reversal day, Chemours, good fundamentals, pays a small dividend, had a belt hold reversal with a pocket pivot mobile breakout, from a squeeze and a kahuna. Cleveland Cliffs, I'm already in. Looked like a bull flag here and ready to go again, an iron ore stock. 17. This is a healthcare, I thought it was an insurance company and a managed care company, but this one's had a great run. I'm looking for a pullback before I get back in it. I had bought it on this pullback here. I recently sold it. Jazz, last week I thought about shorting it, and it would have worked for about an hour, and it now broke back above its 50 with mobile breakout squeeze and a kahuna. Has some earnings coming in this quarter that look impressive. Invitation Homes, not huge volume, although actually the volume is good enough, but breaking out here, mobile breakup from a squeeze and a kahuna. So I saw a number of things that looked interesting. I like to look at the industry groups that they're in and get a sense of what I liked. So lots of REITs, agricultural chemicals and products. Don't see them every day. A little bit less energy exploration here. Specialty pharma, I'm always partial to them. And this is what I like this week. So on that note, I just want to mention again the Discord site. We have built a relatively active site. We got 22 people online right now, which means they probably left their computer on. I'd be one of them. We have 213 offline, so we got 235 people, give or take. It is totally free. If you would like to join, here is the link. I'll leave it there for a second. If you copy that link, you will have a free invite. I never plan on charging. The minute they charge me, I'll probably turn it off. But I don't think they're ever going to charge me based upon what I get for feedback. We have a lot of active threads. You'll have to download Discord, which, just to warn you, it's designed for gamers, but it's great for those of us that trade stocks. And just to review what I use it for, I have general conversation where I'll put stuff. You'll see that Stock Jaguar, Paul Duncan, some of these folks are repeat offenders, that they're putting this stuff out frequently. Some are very good traders. I respond to questions about HGSI as needed, as does Ron occasionally. Paul is often on it. He's like the HGSI cheerleader. The board rules, be nice, is the number one rule. You'll notice that I have other trading systems included because either I was asked by users or it's stuff that I like, and this is my board, and it's independent, and I'll continue to add additional channels if there's interest. Moxie Trader is T.G. Watkins. I met him and his father at a Derek Pilger Magenta Trader meeting. He's developed his own little trading system. I use it. I validate trades with it. It's a little short term for a guy like me that still has a job, but he seems to be doing well with it, and he maintains a channel where he communicates with folks. Toss shared spaces. The intent here is that we start sharing more, and I'll share some more of my indicators and things on that as well. Stock suggestion channel. If you have a question about a specific stock, you can put it there. I'm looking at it, as are others, and usually plenty of people will comment. Haven't had much from Chris, but I'd love to see Chris get active, or somebody who wants to support EdgeRater. Had a few EdgeRater questions. Stock pick of the week. When I don't do these videos, I'll try and do a stock pick of the week. Others have jumped in, including SN Sager, who is from Superior Profit. Superior Profit has a channel as well. He puts out a wonderful video on the weekend, which I will be watching sometime after I finish this. Insider discussion. This came from Maryland and other users. They wanted a place to talk about insider buying and selling. And then Paul Duncan, who is, I can certainly attest to, is a very smart person, excellent trader. Used to go see him lead a VectorVest group in Virginia. Now, I work hard. I travel almost every day, and I got in my car in Beltway traffic from my home in Baltimore, and I drove an hour and a half to go watch this guy lead a meeting. Sometimes it was 3 hours, depending on traffic. He's good, or else I wouldn't have done it. I'll add more stuff as we go. Every once in a while, I'll put something in here that's sort of introductory as well. So welcome to join that. I do a couple of others as well, and I'm starting to figure out these stock bots, which allow you to do charts and other things from here, and still working on that. So on that note, I'm going to say goodbye, everybody. Have a wonderful week. Trade safe, and drop me a line if you like these, things you don't like. And yes, sometimes the sound sucks. I don't always enunciate well, and it is what it is because I don't charge for this, so I'm not gonna go out and spend money and build a studio when I don't really have any economic interest in it. Be good, everybody.